Alright traders, I want you to strap in for this particular trade review because I'm going to show you how, if you are objective, it's so easy for you to find very good trades. It's true that good trades can take a while to set up, but if you actually know what to look for, you will always make good profits. Now, this is the 1 hour chart, and off the bat, I'm just going to tell you right now, I have about 17 standard lots on these trades right now and one micro lot, and I'm going to show you why I'm making this kind of exorbitant trade sizes, but I'm going to show you how and why it's possible. So let's go to the monthly chart and begin to analyze this trade top down. By the way, this is a long trade. That is a buy trade on the Australian dollar, Canadian dollar currency pair. Alright, so this is the monthly chart. So now, when you are looking for a good trade, what do you need to look for? Well, when you come to the monthly chart, look at the chart. What is the chart telling you? Analyze it top down. Okay, we can see here that the market is in a downtrend. That's quite easy to see, but at the same time you can see that there are these rallies. Okay, so because this is the monthly, when the market wants to rally, it may be a counter trend on a smaller time frame, but on the monthly, that rally could give you anything between 2 to 600 pips, if not more. So when you see a rally about to occur like this, you should have reason to celebrate, like in this instance. And if you've done the starter course, or if you are not an amateur, then you know that when you see things like reversal candles, then something is going to happen. So coming to the monthly chart and seeing this series of reversal candlesticks here, we have the hammer, inverted hammer, and hammer again. You should know that something is setting up. Okay, it's true that the MACD is still trending down, but you see, that's on the monthly. Okay, that doesn't stop or negate the market from doing what the market will do. The market will always move in a series of jerks. Okay, so right now we are at a point that the market is thinking of making another rally up. Okay, so that's all we can see on the monthly. Now let's go to the weekly and have a look. So when you come to the weekly, what do you see? First of all, you look at the overall picture of the chart. You can see a prominent wave bottom, wave top situation here, right? And this whole thing here is an extended third wave. You can see the extensions here. So this is a third wave, and of course you know that this is a fourth wave. Okay, so in fact we are still in the fourth wave for now, right? Or rather, another way of looking at it is this could be the fourth wave, and then this is a very short fifth wave. Okay, it's possible, and it's also possible that we are still fluctuating in a fourth wave, but you see, that's on the monthly, so that's not really your concern. Your concern is how you are going to get into a profitable trade, as either as an intraday trader or as a swing trader. Now on the weekly chart, you can see a series of reversal candles here again, so that tells you that the price is definitely halting. Okay, let's go to the daily chart now. So on the daily chart, what do you see? I think I'm going to have to make a module on divergence, because it won't be fair to you as a trader if you've not heard of divergence before. Some of you out there that are listening and watching, you are already professional traders, you have some degree of skill, so you know what that divergence is. But for you out there who don't know, I'm going to make a module and hopefully include it in the starter course. Okay, and if I haven't done so and you watch this video, please send me an email and I will send it to you. Alright, so now on the daily chart, if you were to ask me what I see, the first thing I'll tell you is that, well, I can see positive divergence of the MACD to price, and I've drawn lines here to show the divergence. Okay, so when you see divergence like this and the market is meant to go up, that is positive divergence. Okay, so you see the price trending down strongly. We have a series of lower lows, and MACD trending higher, so we have a series of higher lows. Okay, so I saw divergence here on the daily chart, and now usually whenever there's divergence, it is always followed by a wave bottom or a wave top. For instance, in the case of positive divergence, like we see here, we have a wave bottom situation setting up here. Okay, so if we have a negative divergence, then we'll have a wave top. This is a wave bottom. I'm so sorry. So when we have negative divergence, that means the price is going up, and then we see a divergence of MACD to price, then we will have a wave top situation. So right now we have a wave bottom situation. Okay, you can see here that this point is lower than here. So if we were to plot our price calculator, let's use this point here, okay, because this point occurred before the second one, so we can use the first one. You can see we have price targets going up to here. Now let's go back to the monthly chart and have a look at something. You can see on the monthly chart, I told you that the market was going to rally up, right? Remember what I said about the 55% retracement? So if I were to clean this now and decide to find out where the 55% retracement is, what do you think will happen? So let's take it from here. So if we take a retracement on the monthly time frame, you can see that this is the 62% region. I'm just going to draw a line there so that we'll have a reference. Okay, right. Now let me go back down to the daily. Okay, so now on the daily chart, if I were to take my price targets again, you see, so now we can use the retracement levels and also the price target to actually have an idea how far. Now I've placed my price target here. Okay, that doesn't necessarily mean that I must get filled here. It just simply means I'm willing to hang on, okay, for the long term. But of course, realistically speaking, when the market comes to somewhere around here, and because this is the daily chart, I will have time to analyze and decide if the market has petered out here and is about to make a reversal and start going down. So now, remember, we are dissecting this chart properly so that you guys can know what to look for. Okay, you have to interpret what the market is saying. Don't try to force the market into your own mindset. Just find out what the market is doing and then follow along. So now we've determined that we have positive divergence here, and then we have this beautiful wave bottom. So now you can see I have a series of price targets here. Realistically speaking, I believe that the market will push strongly and get to these zones. Of course, this will take some time, a week and more, but it will get there because this is the positive divergence and it's just beginning. Okay, so but let's go down to the 4-hour chart and see what we see. Now on the 4-hour chart, you see, if I had come here at the beginning to look for a trade, I would be confused because of this whole thing going on here. But by analyzing from the monthly down to the 4-hour, I now have the bigger picture in mind. So I'm not moved by all these fluctuations, and it's these fluctuations that actually cause people to get stopped out. Okay, but if you can analyze these things properly from the top down, you can actually wait out most of these things. No matter how much you have the itchy trigger finger, you can actually wait them out. All right, so now we come here and we see what's going on. So I want to draw your attention to something. Remember, I'm always talking about the 55 or the 62% regions as areas of retracement. Now you can see that the market almost got to the 79. So one thing I've noticed about the market, when a wave bottom or a wave top situation wants to occur, especially after a pronounced run up or down in price. For instance, in this case, we had a pronounced run down in price, okay, and then the market went up steeply and then gyrated downwards. Now, usually when you take your levels there, okay, you will see that move that gives you the second wave, usually about 95 to 98% of the time, it usually gets to the 79%. So that's one of the few instances that the 55 or the 62% retracement stuff doesn't really hold. When the market has been trending strongly in a direction and now reverses or is about to reverse, usually the reversal will peter out around the 79%, and that is what happened in this instance. Okay, so of course I've been keeping my eye on this chart throughout this week. So after analyzing up to this point, you will see what I'm saying. So now we are on the 4-hour chart. Okay, so what I can tell you on the 4-hour chart is, by drawing the price target in, I saw that the market had passed the 62% and was going further down, so I had to go down lower. Okay, so and I've been keeping my eye on it the whole of yesterday. Okay, and here you see what I did here. When the market got to this point and gave me this hammer here, okay, and then went up a ways, I put in, this was a buy limit order for a micro lot that I put in, because I wanted to be certain that once the market turned around, then I could get in fully. So let me make it bigger. So I put in an order here. Okay, then the market was somewhere in this region. I put in an order here for a micro lot. Okay, and I forgot about it for some hours. Okay, so by the time I got back, actually I left it for quite a while because I usually like to swing trade. So by the time I got back, the market had moved up a ways. You can see here, because usually what I advocate is, once the market is going in your favor by about 5 to 7 pips, you should go in with your normal lot size that your risk management allows. So you can see here that I had let's see, I had about 18 pips, okay, going in my favor before entering this trade, which is a pity, because if I had gone in from, say, here, all this would have been good profit if I had entered with my normal 2-lot trade. So but anyway, I got in with a market order here. Okay, and then because I know that the market will definitely retrace to go up, and now I wanted to show you something again. You can see that we had a small divergence situation here as well, positive divergence. So this was also another strong positive confirmation for me that the market was actually turning up, right? So but how I got into this second trade, this 5 lots, was I went to the 15-minute chart and I began to watch the trade. Okay, so I was expecting the market to retrace down to at least 55%. So that's why I came here, so that once the market begins to turn back, I will see it. So this time around, because I wanted to enter with a bigger lot size, I didn't just go in willy-nilly like that. I waited. Okay, so I was watching this, and then when the market retraced, okay, so I entered here and it retraced. So now when it began to fluctuate a little bit and began to gain momentum, because I was watching it here, I quickly put in another order for 5 lots. So I went in just at the right time, and you can see the market pushed up strongly. Okay, pushed up strongly. Okay, so all this while I think I probably must have switched off my laptop by now, because when I put in the trade, I just left it. So when I opened my system today, I saw that the market had gone up a ways. Okay, and you can see here that I've placed another order, a 10-lot order. Now this order, this is the 5-minute chart, and I expect there will be a retracement here. Okay, so this stop loss points here are the 2 trades, the 2 and 5. So I've already locked in some profits. This is $896, this is 23 pips, and this is 43 pips, 600 again. Okay, this must be the 2-lot trade, and this will be the 5-lot trade. So barring any incident, I've locked in at least $1,000 here. Now I've gone in with another order here. I think I took this order on the 1-hour chart. Okay, that's because of what I'm seeing here. If we go to the 4-hour chart, this point, this becomes another valid point to make a 1-2, meaning that you can take here as your number 1, somewhere here as number 2, and this is number 3 rather. So this is now the 3rd wave on the 4-hour chart, pushing up strongly, right? Remember that this trade was activated when we saw from the monthly that we were going to have a rally. So we are talking of a matter of weeks here. Okay, I don't expect this trade. I don't expect to get this profit target filled in the next, possibly in the next 2 weeks, possibly 2.5 weeks, okay? But at least I can play around between here and the first target. I can wait for retracements and keep scaling my trades and make a lot of money between now and when the market eventually gets to this place, if it does get there, because the market is the market, and you can see it can easily just decide to turn around. But by then I would have made a whole lot of cash. So this is a dissection of how to analyze trades. And if you know what you are doing, like I said, now I am not advocating for you to go in with huge lot sizes like the 5 lots and the 10 lots. Please, if your account is not heavy, don't attempt this. Okay, start with what you can afford. Start with micro lot, 1 micro lot, 5 micro lots, 1 mini lot, 5 mini lots, 1 lot, 2 lots, possibly 3. But you see, for you to get into this trade, you have to understand about this retracement. You have to understand about your margin and your leverage and the trade capital that you have. I'm only showing you the method, okay? Because one good thing about trading is once you learn how to trade, the money is a side effect, okay? It's not you going into the trade thinking how much am I going to make. Rather, I want you to just have it in mind that you want to, how will I say this? You want to perfect your skills, okay? And if you do it that way, you will see that you can actually place huge lot sizes like this. Because you see, I could have easily gone in with 20 lots here, but I chose to use 5, because in as much as I was confident, I was still careful about my own risk, okay? Because my account is big enough to weather 5 lots and 10 lots. But if I put in 20 and it goes against me, that might affect my psychology a lot if I miss. So I hope that this was instructional for you. I'm going to make another video on the New Zealand card. It's moving exactly, I'll say about 99% as alike as this, but I'm still going to analyze that one in a separate video so that you can learn from these trades as I place them.